So, Nick, let me start with you. Asian stock markets are reacting positively to the news that Trump's reciprocal tariffs on all countries except China have been suspended. But besides stock markets, where else are you seeing reactions from businesses and investors?
I think the main thing we can focus on right now is a bunch of different markets and companies now realize that they suddenly have a 90-day window to ship as many goods as they possibly can to the US before tariffs, in theory, snap back in early July. I think what this is going to result in is a mad dash in terms of orders, in terms of freight, in terms of production. And so, talking to business leaders, talking to companies on the ground here in Hong Kong and in mainland China, there is this sense of anxiety and urgency to make sure that if this opportunity is given, people don't waste it.
Let me turn to you, Helen. What about semiconductors specifically? They were exempted from the tariffs, but Trump says a special semiconductor tariff is coming soon. How might this affect Taiwan's biggest industry?
So if this will be happen, basically the new tariff will increase the cost of the core materials like the wafers, gases, and other important semiconductor materials. And of course, if the cost is higher, that would definitely further to impact the end device market. So like the PC or smartphone, the price will be higher than before. So like PC plus smartphone takes around 27%, for this semiconductor market, and data center, this infrastructure takes around one third.
So, integrated circuits are only part of the Taiwanese export basket to the US. I think Helen has done a good job explaining that, chips go into a lot of finished goods that, as a result, we could see a bit of a domino effect across the entire supply chain. When we think about the other goods that are at risk, so phones, laptops, other kinds of devices, these are, in theory, subject to this reciprocal tariff. And so any exemption to integrated circuits would only shield the Taiwanese economy to a degree. If we had seen these tariffs be completely adopted as scheduled, then we would have expected a pretty sharp fall off in Taiwanese GDP. We were specifically considering revisions of around 1.5 to 2%, and our previous forecast was around 3.5% growth this year. That would bring us down to around 2% instead, which doesn't sound bad, but is a pretty big shock for Taiwan.
China is the only country for which the tariffs will take effect, and they've retaliated with tariffs of their own. If this US China tariff war becomes the new normal, how might that affect global trade, and is there any chance that Taiwan could benefit from it?
I mean, after a certain point, the tariff rates stop mattering. Chinese suppliers, Chinese exporters were already operating on very thin margins. A 20% tariff would have been challenging. A 60% tariff would have been prohibitive. A tariff of 80%, 100%, 120%, that effectively acts as an embargo on Chinese goods coming to the US. Companies have already received the writing on the wall saying that sourcing from China is already not an option and the US is no longer a destination for these goods. And so there has to be alternative strategies to achieve this. Geopolitical risks are already encouraging China to double down on its self-sufficiency campaigns, particularly when it comes to its reliance on imported components. I think for Taiwan, that's important because China and Hong Kong combined are still Taiwan's largest export market.
I think the first thing we should pay more attention is that for the tension between the two countries actually made more China becomes a self-sufficient country and advance in the semiconductor market. And of course, I'm not so sure how much benefit we can get, but of course, we have seen that most of the company move their manufacturing site to US, like TSMC. So basically, US still the very big market for semiconductor takes around 20%, and also most of the clients for advanced node for TSMC are US companies. But of course, the high tariff still a very strong threat to hold all the supply chain.
Last question. Donald Trump has now pulled back on tariffs at the last minute, similar to his playbook with Canada and Mexico. Having done this twice now, do you think businesses and investors will find his future tariff threats credible?
I think you raised a really good point about credibility, which generally is kind of under threat in the US right now. The policy uncertainty is bad for business. It's bad for investment decisions. It's bad for hiring. It's bad for household spending. Based on this uncertainty alone, we actually now expect the US to fall into a mild recession this year. And that's despite what's happening with tariffs. When it comes to whether we can trust what Donald Trump is going to do in terms of further tariff escalation or de-escalation or even finding a trade deal, the amount of uncertainty that we have here is going to push people to diversify away from the U.S. market.
Yeah, I think indeed, as Nick mentioned, because it's really hard to make a decision at this moment for enterprise now, as the companies we interviewed here, most of them actually would rather to wait for the other 2-3 years and suffering in this period. But the other thing I want to highlight is that currently we see most of the company or countries actually build a more friendly, peaceful approach to U.S. government, but they didn't get the favorable response. So likely they were likely to build their regional trade relationship with other countries so that they can reduce the reliance on the single market. So I think that's definitely the thing that U.S. government would not want to see.